Good afternoon, everybody. Welcome to our latest lockdown webinar, where we're going to be discussing the FATF's mutual evaluation of the UAE, recently released on the 30th of April. Thank you all for joining us. I hope everybody is safe and well. I'd like to extend a warm welcome to our partners at the Capital Club and their members who have also joined us. And please, everybody, feel free to ask questions online as we go through. My name is James Wightman. I've been in the region for 10 years, working in financial risk management roles at Mubadala before joining Themis as MD for MENA. Themis is a specialist financial crime firm that bridges between public and private sector and provides an end-to-end ecosystem to help companies identify and manage their specific financial crime risks. By way of introduction, we have four fantastic panelists joining us kindly today. Graham Baldock, who's Chief Compliance Officer at Anglo Gulf Trade Bank. Before working at Anglo Gulf, Graham was Global Head of Financial Crime Compliance within Global Trade and Receivables at HSBC in London. Also Hala Bou Alwan, who's CEO of Hala Bou Alwan Consultancy. Hala is a lawyer and financial crime SME. She's previously led the market development for risk and financial crime business at Thomson Reuters in emerging markets. Next, Chris McLeese from Dow Jones. Chris manages the Dow Jones risk and compliance business across MENA, supporting clients with KYC, AML, and media screening solutions. And lastly, Dickon Johnstone, CEO of Themis. Before founding Themis, Dickon was CEO of First Abu Dhabi Bank in the UK and previously spent 12 years in Abu Dhabi and Dubai with Barclays, Abu Dhabi Finance, and NBAD. So, I presume that everybody who's registered for this webinar understands the context of FATF. However, just for clarity, Hala, would you mind just giving us a bit of background on FATF, what role it plays in combating financial crime, and from a legal perspective, do we need to really listen to take note of what they're saying?
Thank you so much, James, and thank you for having us. I think it's a great lineup and amazing speakers. So I'm looking forward personally to learn a lot from this webinar. So going back to your question, FATF was, to explain what's the role of FATF, I would rather go back in history, just to understand the present, like why it was formulated. So sure. FATF was formulated in 1989 by G7 in Paris. And its initial mission was to fight money laundering. Then in 2001, they developed their mission and it started fighting terrorist financing. And then again in 2012, they started fighting the proliferation of weapons of mass destruction. And by time, like the development of FATF recommendations to set the standards for anti-money laundering, terrorist financing, and funding of weapons of mass destruction, they started even updating the recommendations to be in line with the developments we're having. So on regular basis, they develop those recommendations and they work very closely with governments at a national level to set the anti-money laundering governance between the governments. So it also plays this political role in addition to intergovernmental policy making role. And one of the things which actually caught my attention, I didn't know that before, that initially when FATF started, they had a strict limited time span, like year after year, and every time they have to take the permission of their presidents in order to renew their mission. So as if like their mission wasn't that credible or adopted regionally. And luckily, in April 2019, they have an open-ended mandate now to set the standard. This tells us something. This tells us that it is now a very, very credible kind of regulator which sets the standards for anti-money laundering. And for the second part of your question about like why UAE should take note of FATF and even why everyone should take note of FATF. But since we're talking about UAE, there's many reasons. First, UAE is part of GCC and GCC is a FATF member. Second, UAE is a MENA FATF, Middle East North Africa FATF member. And Middle East North Africa FATF is an associate member of FATF, and all of those should abide by FATF recommendations. Being a member of FATF, you should abide by that. Third, the recent regulatory changes, all of them, like in the UAE, set clear clauses that everyone in the UAE should abide, whether organization, financial institution, non-financial institution, it's non-limited, should abide by FATF recommendation very clearly. It's in federal laws, DFSA, ADGM, everywhere, ESCA. So it's clearly, so it's also now legally binding. And fourth, reputation risk, because if FATF evaluated any country and found out that it's blacklisted or even not satisfying a certain percentage of the requirement, it will be on the blacklist. And this again is a reputation risk for the region. Thank you, James. Over to you.
Thanks, Hala. Yeah, that's great legal and I guess macro context. I think before we look at the results of the FATF evaluation, I wonder if we just get a poll from our audience, if we can pull that up. How would you rate the UAE from an AML and counter-terrorist financing perspective? So at the top there, we've got, we're leaders in this field internationally, all the way down to the bottom, we still have a long way to go. So we'll just give the audience 30 seconds or so to vote on that. Just a couple of interesting stats while we wait for that. Just that the FATF has calculated global effectiveness at stopping money laundering at 32%. And approximately 47% of firms globally have been victims of financial crime in the last 12 months. In addition, 1% of illicit financial flows are intercepted globally. So quite eye-watering statistics here, which just, I guess, pays testament to the FATF and the importance of its role globally. Now, I think the majority of people have voted now. If we can just close that poll and pull it up. So interesting, not many people are saying we're leaders. There's a strong focus, a strong majority actually, there's a strong focus in the UAE, but we still need to do more. And then going down to many firms are not aware of their responsibilities, which indicates, there's an educational piece here, as well as we have a long way to go. So it's kind of at the middle and lower end of the scale or spectrum in that respect. So very interesting. Well, let's see how in tune our audience is with the FATF results themselves. Dickon, could you just start by giving us a bit of an overview of the FATF report? When was it published? What does it say about the UAE?
Well, thank you, James. So I think as many of you will know, this report follows an in-country visit last year from the FATF assessors between the 1st and 18th of July. And I think many of you on this call possibly were involved in that assessment as well. And the report, as you said at the beginning, Jamie, was then published after a long consultation about 2 weeks ago on the 30th of April. Yeah. But essentially, what is this report? It analyses the level of compliance with the FATF 40 recommendations and the level of effectiveness of the UAE's AML and CFT framework. So, given how many of you have joined us here today, I'm guessing you want to hear what it says and what it means for the country. And judging by the rush of pundits willing to pour scorn over these results, you might be forgiven for thinking that this hasn't been a good outcome for the UAE. However, my view here is with careful reading beyond the headlines, I actually think there's a lot for the UAE to be very proud of. And the report actually highlights the significant progress that the UAE has made since the last evaluation in 2008, where the UAE was rated as non-compliant or only partially compliant, with a mere 57% of the FATF recommendations. Fast forward to now, and there are no areas where the UAE is not compliant. Instead, the UAE is 85% compliant or largely compliant with all of the FATF recommendations. Now that's a big swing and really reflective of the focus we have seen amongst the UAE regulators, as well as private sector leaders and practitioners, who I think have all been driving increased awareness and understanding of financial crime across the country, and very much continue to do so. So for me, I think there's a clear recurring theme in this report that says the UAE has made significant improvements to its AML and CFT framework, which are all important steps in improving the overall effectiveness. However, it's perhaps too early to assess their impact in mitigating some of these risks the UAE faces. Does that make sense, James? And does that kind of ring true with what you were hearing and expecting?
Yeah, I mean, so really, you're all quite positive about this. I mean, were there any serious failings or problem areas that were identified?
Well, yes, there were, James. But I think whilst the report certainly makes a series of recommendations for actions, and it's not all light reading. I think it's a bit more nuanced than some of the headlines may suggest.
Yeah.
Now, to the audience, please bear with me. At 286 pages long, the report is not all that concise. And so I've been asked to summarize the key finding in less than 10 minutes, which isn't that easy, but I'll give it a go. So first off, I think I want to talk first about the areas of improvement since the last evaluation, because I do think it's important to be aware of and to understand the current landscape and what's been done so far. So based on the global standards, the FATF judged that the UAE has clearly increased its commitment to strengthen these measures since the last report. The previous evaluation said that a national coordinated and strategic approach to AML and CFT is urgently required. But by 2020, many of these key elements of this approach were in place, including, and importantly, a national risk assessment, which analyzes the money laundering and terrorist financing risks faced by the country. Whilst the contents of the NRA were somewhat private, this paved the way for the UAE to enact the new anti-money laundering law in 2018 and an additional AML bylaw in 2019. This new law also introduces the concept of legal privilege and defines money laundering as a standalone offence that is independent of the predicate crime, which in my view is so important. On terrorist financing, the FATF particularly commended the practical steps taken by the UAE. It recommended that the UAE state security has a robust array of tools, data sets and capabilities that it can employ to investigate and analyse terrorist financing related activity. And it goes on to say that the UAE has been similarly effective at seizing the broader proceeds of crime. Figures for domestic confiscation, criminal fines, repatriation, sharing and restitution are high. And this is particularly attributable to an improvement in interagency cooperation, which has made it easier to compile and utilise financial intelligence across the country. It's interesting to note that international NGOs have begun to take note of this, and one that I really like, Transparency International, in its latest annual corrections perceptions index, actually marked the UAE as less corrupt than the United States. These are just a small selection of some of the improvements referenced in the report, and I bring them up because I think it's really key to understand how much work has gone into strengthening the country's controls over the last few years.
Thanks very much, Dickon. I think many thanks. Yeah, I appreciate it's not easy to summarise a 200-page report in such a short period of time. Hala, do you, in terms of the key findings of the report, is there anything that you would like to add to that?
Yeah, absolutely. Actually, I want to echo what Dickon was saying regarding UAE efforts. I think it wasn't fair in order to evaluate UAE right after the development of its new regulation. Like it wasn't UAE wasn't given enough time to prove the concept or the formula. So as Dickon outlined, we had the federal law end of 2018, cabinet resolution in June 2019. We had DFSA mid of 2019, same ADGM, FRSA, ESCA, all of them updated their regulations, anti-money laundering, terrorist financing regulations, like around June, July, like if you want to say the average of the dates, you know, so mid of 2019. And there's no 1 year now passed yet on proving the concept, the formula. So I think if FATF comes again and evaluate UAE initiatives on anti-money laundering in 12 months time from now, the results will be completely different. Specifically the new regulations, as if like UAE knew what's coming. They knew where they're lacking behind, because all the regulations highlighted the areas of improvement which came afterwards. You know, so the report was April, the initial evaluation February 2020. However, the law was before, 6 months before. They highlighted everything, whether the new kind of creative crimes through cryptocurrency and virtual asset and digital identity, whether the ultimate beneficial owners, whether knowing your customers, whether an independent financial investigation unit, whether collaboration between, like international collaboration, whether politically exposed persons definition, expanding it, whether the enforcement measures, everything is highlighted in all the regulations. So I think UAE is, like, to be fair to the UAE, it's like the laws, the new updates are awesome. I urge FATF to come again in 12, 18 months from now and see the results. They will see like dramatic changes. Thank you, James.
Thank you. Thanks, Hala and Dickon. Okay, if we can jump into a quick poll now from our audience. If we can pull that up on the screen. So how does the UAE compare with other countries in terms of its financial crime risk rating? Do you think we're the top 10% or tearing down all the way to the bottom 10%? There's a few different options in there. While we're waiting for people to vote, I think it's worth mentioning that, whilst the FATF rates individual countries, it doesn't rank them against one another. And I think it's important for senior business leaders and compliance professionals to understand that there are some good sources of knowledge out there that you can reference. One is the Know Your Country Index, which ranks individual countries against one another. Another good one, and one of our partners, is Transparency International, and they have a corruption perception index which we use, and that's very useful in understanding different jurisdictional risk. So you can reference that also. Okay, let's just see how we're doing on the polls. We can close that up. That would be great. Okay, very much mid-tier. We've got a few saying that, you know, we're top tier, and then majority of people, 53%. So there's a kind of a very much a median distribution there, I think. Tails off at the top and the bottom. Interesting stuff. And I think as an interesting proxy to that, it's actually very comparable to the KYC, which ranks the UAE 133 out of 245. So comparable, very comparable. It's also worth noting that the OECD has just completed its second review of the UAE within the Global Forum on Transparency and Exchange of Information for tax purposes. So worth all of you reading that if you have time. Okay, now as part of your, I suppose generally speaking, as part of your company's business risk assessment and as a point of good practice, you should really be referencing the national risk assessments to understand the wider threat landscape within the region and how this impacts your business specifically. So if we can jump straight back into another poll, if we may, what do we think some of the main financial crime risks facing the UAE are? Terrorist financing, trade-based money laundering, third-party money laundering, cash-based money laundering, or modern slavery? And whilst you're taking the time to complete that, I thought I'd mentioned that we at Themis do an annual financial crime survey. This is a global poll looking at key threats and challenges facing the industry, as well as criminal techniques and trends. We'd love it if to get everybody's input, and if I could ask anyone that's interested to please complete that questionnaire. We will obviously share the results with those that complete it, and you can feed those into your BRAs. You can also find that on the Themis website, www.crime.financial. Okay, how are we doing on the poll? We're looking good. Okay, we close that up. See what that looks like. Trade-based money laundering is a big one, 37%. Third-party money laundering, 31%. Cash-based money laundering, 23%. Yeah, I mean, I guess as we move into more of a digital age, maybe if you'd done that a few years ago, that would have been a lot higher. But interesting on the trade-based money laundering piece. And it's a fantastic segue actually to go back into the specifics of the report. The FATF report says that it's too early to assess the impact of mitigating sophisticated risks such as trade-based money laundering. And as we see here, one of the particular challenges of the UAE that the UAE faces in its position as the centre of trade, finance, tourism and transport for the GCC and MENA region, but also internationally. I'd imagine that the majority of products bought or sold will have some form of connection or link with Dubai, Abu Dhabi, or many of the other Emirates upon their travels in terms of financial flows or even indeed physical flow. We're going to talk about some of these risks in a bit more detail later, but I just wanted to pick up on the trade-based money laundering piece, citing the report as one of the key risks faced by the UAE. It's also worth noting that whilst the report praises the AML strategy to strengthen the UAE's overall AML and CFT framework, it's too early to assess the impact, as Hala and Dickon mentioned. Graham, I know you've got some specific views on trade-based money laundering, the risks associated with it. Would you like to just take a few minutes to elaborate on that, please?
Yeah, no, thank you, James. Thanks, Dickon. And thanks for inviting me. I am going to have to apologise to my old team in London because they've heard this time and time again. I had come from a trade finance bank, and there is a bit of a misconception that every time you talk about trade-based money laundering, everybody focuses immediately to trade finance. Slightly unjust, I think. If I was a seasoned criminal, I wouldn't be using trade finance. But however, you know, we've got to understand that 80% of world trade is settled through open account payments, so straight through wires. And we need to holistically start to assess the customer's activity, moving away from per transaction assessment, where we're looking at different suites of products within an organization. True money laundering is complex, probably for another webinar, but you know, the black peso market typology, for those of you know that the segment which is trade finance related probably to an organization would look legitimate. But if you holistically assess the entire activity, then you start to get an understanding of the crime that's being undertaken there. The FATF report mentioned customs data. It mentioned underutilization of that data. It also mentioned the numerous company registries, and I'll leave Chris to go a little bit more into that. But there's a lot of data externally in the UAE, and trade-based money laundering isn't unique just to the Middle East or the UAE. And so what we need to look at is, by moving this, as I said, this assessment of our customer activity, understanding the buyers and suppliers, utilizing customs house data, company's house data, utilizing customs data, and mapping that across our book, across the product suite, then we should have a far better understanding of what the customers initially advised us they would be doing and utilizing with our products to what they actually do. And therefore, we're sort of lifting that level of analysis away from the traditional independent transaction monitoring. FATF, you know, there's a big impact by not falling in line, but we need to jointly look at our efforts. James.
Fantastic. Thanks, Graham. Yeah, I mean, it's interesting. It's a global issue, trade-based money laundering, but it's a very significant one, and one, I guess, you know, that's ripe for automation going forward, and that indeed that's something that Anglo Gulf Trade Bank is looking at. So I guess that, you know, mitigates these kind of risks significantly as well. Hala, just if I may, the FATF report discusses the unique legal structure and framework in the UAE, specifically the number of different regulators, free zones and authorities across the Emirates, which clearly, you know, must give rise to kind of regulatory arbitrage and provide opportunities for financial criminals to take advantage of the gaps or cracks in those kind of regulatory arbitrage areas. What's your view of the effectiveness of this framework, and how easy is it for financial institutions and DNFBPs to navigate?
Thank you, James. It's a great question. Just knowing the UAE location, like between two continents and even between conflict zones, and having within the UAE 7 emirates, 2 financial free zones, 29 commercial free zones, and 39 company registries alone is a complex structure. So definitely this creates lots of challenge for not only for companies or designated non-financial businesses and professionals, financial institutions, companies, even for government itself. Because at a national level, enforcement is different between company registry and other free zone, financial free zone, and other commercial free zone. So enforcement is completely different. And some of those registries or free zones, some of them are stricter than others. And it gives this platform for criminals to select, actually, to pick and select which one suits its crime. And we see it a lot. We see it like there are certain registries where they take the minimum KYC requirements, and this shouldn't be the case, while other free zones are so strict. And this also creates unfair competition in the market. Like, I witnessed a case where someone was creating a cryptocurrency company, was trying to open an account in one of the financial free zones, and another cryptocurrency company, service provider, opened it in a company registry. If you see the requirements, one of them got the license in a few days, one of them till now, after 9 months, still struggling to get the license, although they have everything in place. So you could see the discrepancy between the requirements, the onboarding mechanism, and all of that. In addition to that, even the reporting requirements between like this registry and the investigation unit is different, because some of those registries or financial free zone authorities reports directly to the central bank when there's a crime, while others no. And sometimes you get confused. Money laundering is money laundering, so it should be everywhere. And the final thing, which I find needs like lots of enhancement and at the national level should be looked at, is the unity of collaboration. Like, if all come together and set the same enforcement measures, I think lots of the findings in the FATF report will be not there, because one of the main issues which Dickon highlighted also, the abuse of legal persons. Why the abuse happens? Because of these platforms. These platforms allow that. So I think one of the things, like, there's a positive thing, as we talked about, the regulations are updated or amended, and they say that there should be collaboration. And they're also, as per the AML federal law of the UAE, they now require the company registries to have like a stricter requirement than usual. Customer due diligence, the KYC, but definitely it needs to be looked more into, and like certain details to be at least at the same level with the DFSA or the ADGM, not to have this huge discrepancy. So that's for me. Thank you, James. Can you hear me?
Yeah, no, it's fascinating. It's a fascinating area, and I guess it's sorry, I'm losing you a little bit there, Hala, but it's definitely an area where I guess standardization or a unified approach or coordinated approach on that legal framework going forward is something that I guess would be beneficial. So a very interesting one. Thank you. Chris, just briefly moving on in terms of the FATF report and its recommendations around the need for greater transparency of beneficial ownership. What do you see the risk here? Is there a consolidated framework in the UAE and internationally? And how should firms go about understanding beneficial ownership?
Okay, thanks, James. A lot of questions there to answer. Let's kind of go back to the start and try and understand why beneficial ownership is important, and better still, why it's part of the process of terrorist financing or money laundering. In our view, and in my view, understanding beneficial ownership is the most important aspect of the know your customer process. Simply put, if you don't know who your customer is, you can't fully determine the risks that customer poses to your business. Now, this is particularly relevant to banking. However, all organizations across the board should know and understand who their third parties actually are. That said, this is easier said than done. There's many, many challenges with this. And as a business, we undertake due diligence on entities operating in the Gulf on behalf of global clients. We also undertake due diligence on behalf of local firms that are based here. And the recurring theme on behalf of all of those clients is that the UAE is a challenging environment to obtain information on. Now, that said, there are many, many other challenging jurisdictions in the world. The UAE isn't alone here. You have places like the British Virgin Islands, Jersey, Cyprus, even the USA. So the UAE isn't alone in this kind of fight to get information. And one other point to remember is that although there is a global trend and a lot of nice words around greater transparency, the we find that there is, and other industry experts will comment on this, that there is a kind of consistent, kind of lack of consistent best practice around what is UBO identification. The report itself points out that the risk of criminals being able to misuse legal persons in the UAE for terrorist financing and money laundering is high, and it particularly references the concealment of beneficial ownership via very complex ownership structures or the use of nominees. And the report itself also has criticised the UAE for failing to penalise people who do not provide information. And coming back just to what Hala mentioned, one of the main issues here in the UAE is that we have 39 company registries, offshore companies, onshore companies. It's a little bit of a minefield. Not only is there an issue with transparency of the information, but the report also points out that in certain sectors there's also a lack of understanding around what beneficial ownership is as a topic.
Really?
As Hala, and as Hala also pointed out, there's a difference between how a lot of these registries maintain records, gather information, their policies and procedures. Some areas are easier to set up a company than others. In some free zones, for example, the overseas residents don't need to be physically present in the UAE to open a company. So, as part of the risk assessment and the recent changes in AML regulations, new beneficial ownership structures have been outlined. The report mentions that even though these are not particularly comprehensive or not fully in place, they still don't adequately address the issue of foreign directors, shareholders, or beneficial owners. So it is clear, there is a challenge in obtaining information, and there are issues around the consistent quality of information that's available. Now, coming back to your question just about how, general practice for how firms can better understand their customers.
Yeah.
Let's break it down simply into kind of three parts. When you're conducting due diligence, there's the business unit. So who is in charge of that business unit? Is it a relationship manager? Is it a compliance officer? Who runs that business unit? Do the staff in that business unit have adequate policies and procedures? Do they have the right training? Do they have the resources in order to gain information about customers? Secondly, there's the customer and the third party themselves. Quite simply, customers have to provide information. Being private in this day and age is not good enough. Customers should be able to justify the relationship that they want to hold with the business. Lastly, there's the availability of external data sources. A further challenge is the limited availability of media. In the region, we have language issues, we have name similarities, and that's why people employ industry experts such as us to undertake research on their behalf. But kind of in summary, if any of those three sources of information are flawed, our advice is where a UBO can't be identified or a business isn't confident, you have to ask yourself, how do we know what risks we're open to if we don't fully understand who our customer is? So kind of just to come back to the overall solution, the current UAE system means that each registry has different rules and regulations. The setup of the NER will not only help with sharing of information, but it'll also help with common standards in the UAE around beneficial ownership. And this shows that the UAE is making progress in addressing this as a UAE issue, not an individual 39 registry problem. The UAE has also been advised to speed up the implementation of this register and to develop understanding of beneficial ownership across the country through guidance and training. Yeah. And the UAE has also been advised to determine policy nationally and to implement sanctions to those who fail to comply with information requirements. So in summary, whilst the UAE is implementing the NER, which will drive long-term success, it won't stop the process of terrorist financing and money laundering. There are many factors that will determine its success. This includes awareness of the subject, enforcement, training, ongoing evaluation. And it will be interesting to see how this guidance that has been provided in the report turns into and evolves into actual best practice in the coming years for when the next evaluation will take place.
Fantastic, thanks, Chris. That's fascinating. It's a much broader subject, as you kind of alluded to at the end there. Dickon, I know you've been working closely with various regulators here in the UAE and internationally. What's your view of the FATF's report and the response to that?
Well, thank you, James. I mean, I guess some really important points made so far in this webinar, and I think, as Chris says, that the call for the National Economic Register is really, really important. I also think that customer perceptions are also changing in the industry. So, Chris, you mentioned that sometimes in this region, people are slightly unwilling to give their information out, and I think that's changing quite quickly. Particularly as Middle Eastern customers get exposure to the international banking market as well, which is important. But I think, Jamie, from a regulatory position, my perspective is quite an interesting one. So at Themis, we work as a bridge between the public and private sectors, and we work with a number of different regulators around the world. And so for me, it's quite interesting to see how different regulators respond to this and some of the challenges that are being raised here. I think first off, again, and in line with what I was saying earlier, the report is actually quite clear to highlight some of the positives from this kind of regulatory action in the UAE. So it highlights the risk-based approach and supervision being undertaken, particularly by bodies such as the DFSA, the FSRA, the Insurance Authority, etc. I think as well, there's a lot of changes that Hala mentioned at the beginning are coming across as well. So, you know, for example, my ex-CEO, Mr. Abdulhamid Saeed, has just been appointed as the governor of the UAE Central Bank. I think he'll make an excellent governor. But I know from speaking to many there and also other financial regulators, such as the ADGM, that financial crime is right at the top of their agenda. And that's really interesting to see and really important. I've also been particularly impressed as we've been talking to them about their focus on education, guidance and support for both FIs and DNFPBs across the country. And I think that should be really applauded. So in many countries, the regulators are there really to supervise and enforce, and they're seen as the kind of policemen. And I think what the regulators in the UAE are doing really nicely is they're taking the industry with them in terms of that outreach and that guidance and that education and awareness, which is really important. I also think it's nice that the UAE regulators appear to be working together to tackle this kind of macro threat, and that's excellent too. So just recently, when was it? On the 5th of May, there was a joint statement issued by the Central Bank, ADGM, DIFC, the IA, ESCA, and the Ministries of Economy and Justice. And that was really important because it gave a joint statement covering the treatment of financial crimes and obligations, particularly in this context now of COVID-19. So very relevant and to the moment. If I can just talk about that guidance very quickly, because I think it's really an important one. Essentially what the regulators are saying is that the private sector should redouble their efforts in the current landscape when the risk of financial crime, fraud, and exploitation scams, cybercrime, terrorist financing is particularly heightened by what we're seeing in COVID-19. And so their joint guidance is actually quite prescriptive and very useful. And I think it highlights some really important kind of initiatives that firms should look at. And if I may just talk about 3 or 4 of those very quickly. So first off, the joint guidance encourages firms to refresh your risk assessments and your control frameworks now to incorporate the emerging risks that are arising due to COVID. So they're encouraging you all to revalidate your policies and procedures and control measures and make sure that you've incorporated these latest threats that we're seeing as a result of COVID into that. Secondly, I think the report really highlights the importance of continuing to meet customer due diligence requirements, albeit using other sources such as technology or external due diligence if you can't meet your customers face to face. We heard a little bit about that from Chris earlier on, but I think really, really important to make sure you have accurate data feeds and information, such as the ones provided by Dow Jones, but also others as well. I think in terms of customer monitoring, the guidance warns that COVID-19 could lead to altered patterns of behaviour. And I think we're all seeing that, and we all understand that in the press. So FIs, banks, DNFPBs, they're all asked to pay particular attention to that and to really carefully analyse your customer transactions, to identify any suspicious behaviour, report any suspicious transactions through the FIU's kind of Go AML platform, and make sure you're really focused on that and doing that on a timely basis. And I guess lastly, and on a similar note, law enforcement bodies locally and internationally are updating their sanctions lists on a daily basis, given the current threats that we're involved in. So I think it's really important that businesses also make sure that they have the right lists and feeds that give them that information on an accurate and daily basis. So I guess what's interesting about this for me is this is the UAE regulators giving a joint response, not just to the FATF recommendations in the report we've been discussing, but also contextualizing that in the current COVID scenario. And I think you can summarize that by kind of saying that whilst many of us are working from home, it may be tempting for firms to focus only on maintaining service for your customers. And I think we're seeing that many other core functions are either falling away or are perceived to be less mission critical. And what's so important about this is the UAE regulators are coming out and jointly saying here that actually, rather than that, now is the time for private sector firms to really redouble our anti-financial crime efforts, because the risk is heightened in these current times. So I thought that was really useful. I hope everyone has kind of read the guidance that has come out of the regulators. If you haven't, though, we will make sure it's sent around after this webinar, and also very happy to chat through with anyone offline if you want to talk through what it means or if that would help in any way.
Fantastic. Thank you, Dickon. Yeah, very informative. I would like to just open up broader questions now. If anyone has questions from the audience that you'd like to ask, please fire them through on the question box on the right side of your screen, and we'll endeavour to answer as many as we can with the time we have. I have one here specifically for Hala. Hala, in your opinion, which authority in the UAE can bring about a unified approach on money laundering regulations and standards and reporting?
Thank you. Actually, that's a great question. I believe, like, since we have AML federal regulations and we have the central bank, which is, for me, like, it's the foundation of anti-money laundering. You know, it's the platform which was there before any other platform. I would definitely see central bank having this unity and like having this control, centralization of everything.
Thanks, Hala. We've got another one here coming in. Setting up a company in a foreign country seems to be quite a simple process. This allows free movement of money laundering. How do we control this as a global issue? And is this something that could be controlled under FATF? Chris, would you be okay with that, or would you prefer to defer it to a legal person to answer?
I think we can answer it. I think Hala and I can answer it together. I mean, there's many things in which we can cross over on that, Hala.
Yeah, sure. Actually, that's also another great question. And this is the objective why FATF was initiated at in the first place. Also, United Nations organization, SCR, or Office of Drugs and Control, because it's a global issue. And definitely when we have the placement, layering, integration, the three phases of money laundering, this is how it happens. Sometimes it's established outside the UAE, and then it's integrated in the system in the UAE. That's why we have the right onboarding process. That's why we have correspondent banking relationships. That's why we have international treaties, which we need to abide with. And from a legal perspective, when you're dealing with an international thing, any international treaty supersedes the local regulations. So whatever is more powerful, and usually international treaty, you should abide by that. So taking the right measures, following FATF recommendations, whether in terms of ultimate beneficial owners, because this is the main issue when we have outside business activity brought into the UAE, sometimes we lose track. Especially the criminals are so creative, they do this complex structure with several layers to make the, you know, the organization here in the UAE or the authority lose track because of the several structures. Ultimate beneficial owners, you know it, you screen it, you do the due diligence, the enhanced due diligence depending on the risk-based approach you take, and then the regular KYC monitoring, like an ongoing monitoring, which actually Chris is better to talk about that. Like it's not only when you onboard the organization, it's also there's ongoing monitoring which should take place. And Chris, over to you to add anything you want.
Yeah, thanks, Hala. No, I mean, there's many reasons why people open companies in Dubai, and for many different reasons, whether it's for tax benefits, it's for its ease of doing business, etc. But I mean, what we see in the industry and with a lot of the people whom we work with, we have worked with some of the free trade zones, we work with banks, and what we have seen, the first line of defense almost now is when a company comes to set up in one of the free trade zones that I'm referencing, is that the free trade zone will do their own due diligence on the beneficial owners of that company. That's the first line of defense. So the company may be set up, but that's not to forget that, funds received from that company then have to enter the banking system. So the banking system can almost be the second or third line of defense to prevent that from happening. So whilst the trade zones have one objective, the banks have another, they can almost work hand in hand together. And what we're seeing is an improvement from both perspectives, from banking and from the different free zones, for example, to combat that through better use of surveillance and screening technologies.
Fantastic, thanks, Chris. Yeah, that's good to hear. I think we've got time for another question here. We got. I'm going to spread this across everybody, if I may, individually. If there's one thing that firms in the UAE should do to enhance their protection against money laundering and financial crime, what would it be? Graham, would you be okay to take that first?
Yes, I mean, I know that we've discussed this before with Hala, and she was talking about unifying the internal teams, the mechanisms, the mitigation. A lot of firms, especially big firms, are very siloed between fraud, money laundering, sanctions. And I know that, the FATF report talks about, money laundering, terrorist financing, but we can't forget all the other sort of financial crime risks. So holistic assessment, which is something I touched upon earlier, and Hala and I have talked about it before, bringing all these teams together.
Thanks, Graham. Chris, any views on that?
Yeah, I mean, I think one thing that's very important to remember is that the UAE is not really different to the rest of the world. Money laundering, illicit trade, bribery, corruption, terrorist financing happen here as well as in the US, the UK, North America. The financial crime risks here aren't significantly different to other markets. Although the market in the UAE is complicated, we've discussed some of the reasons why. There's even recent examples of companies in the UAE facing OFAC sanctions for doing work with Iran and selling goods to Iran. But from what we see in the UAE across a lot of different sectors, whether it's oil and gas, telecoms, even banking is a common theme. And even though we have many mature and experienced compliance professionals working here and running compliance functions, one thing that I see and is a recurring theme that holds back the long-term success of compliance is the engagement and the involvement of senior management right up to board level. We only will see successful compliance programs which will encompass a lot of the things that we've talked about, like beneficial ownership, money laundering, terrorist financing, when senior management across an organization fully embrace compliance culture to help and support.
Thanks, Chris. Hala?
Yeah, actually, as Graham outlined, like approaching this holistically. And one of the things I find, if you read the report of FATF and the new regulations and all the gaps we have, areas of improvement in the UAE, sometimes they have common source, which is the working in silos. And I feel there's so much focus on money laundering and terrorist financing where we're forgetting the rest. Actually, it's too much focus, to the extent like it's too much sometimes, like as if there's no other crime in the world except money laundering and terrorist financing, and that's it. And if you see like the silos within organization, they have anti-bribery and corruption department, which deals with their crimes alone. They have anti-cybersecurity, which deals with their crimes alone, anti-fraud also, which deals with their crimes alone. And sometimes if you see the money laundering crime, to do the crime, there was fraud, there was bribery and corruption, of course, and there was cyber crime involved in that. Apart to the other crimes, of course, which we will come to it later, which is human trafficking, modern slavery, child labor, etc., etc. I think we should just focus on each of these crimes like in an equal manner, and see like they are very much linked. And I think once we focus and we have this mentality, setting the tone from the top within the organization, we will just cut this loose end, you know, within the crimes. And I think we have better control. And this shouldn't be only at an organization level. It should be at a national level. There should be a national governance anti-financial crime platform, you know. Thank you.
Thank you, Hala. Dickon?
Thank you, Jamie. And yes, I would absolutely second what Hala has just said there, as well as Graham and Chris. I think for me, the most important thing is around education. So it's about understanding the impacts of financial crime. So going back to Hala's point, this isn't about compliance per se and complying with regulations. This is about understanding that the impacts that modern slavery and human trafficking have on society. This is about understanding the impact that cybercrime has on our economy. And I think what's really interesting for me is, as we've been talking to senior business leaders around the UAE, actually there's a really nice recognition that from them that they want to talk about those macro issues. And I think, you know, a nice example, for example, is the UAE is possibly one of the most advanced nations from a digital technology perspective. And I think a lot of CEOs we're seeing really recognize that. So what they're talking about is how they protect the long-term business viability of their businesses, and how they protect their firms from these threats. And that's really, really important, because that drives a culture of financial crime mitigation rather than one of pure compliance. And I always say that compliance can often be a kind of race to the bottom. What's the minimum that we can do to avoid being told off by people like the FATF? But actually what's much more interesting and what's much more important is how do we protect our firms and our customers from some of these long-term risks and build long-term sustainable businesses. Does that make sense?
Fantastic. Yeah, thanks, Dickon. I think the tone from the top is a good theme, actually, and I really like that. You know, the tone needs to be set from the top in organizations and kind of permeate or cascade down. So thank you all of you for your thoughts on that. We're going to dive into another poll. I think we've got time. Yeah, we've got another 5 minutes. So if we can pull that up on the screen, that would be magic. What would you like to see more of from a financial crime support perspective? More corporate budget allocated, more practical guidance, a greater understanding of technology, research and guidance on specific UAE threats, or all of the above? So I think just while people are voting, to summarize the kind of discussion that we've had today, that financial crimes it's a growing global issue that senior leaders in firms and regulators need to increasingly prioritize. And as we've just heard, you know, there's a need for educating businesses on their obligations, and in parallel, potentially to simplify and standardize legal and regulatory environments across jurisdictions. And of course, very encouraging, as Dickon mentioned earlier, that the joint guidance has been issued by different regulators from, you know, the central bank, Abu Dhabi Global Markets. And I think, you know, as we particularly look to attract more inward investment and tech startups, etc., into these ecosystems, that, you know, can only be a good thing, a good precedent to set. Another thing I think to highlight, you know, the increased focus on due diligence and ultimate beneficial ownership. as Chris talked about earlier, as well as greater international collaboration. So all good stuff. Okay, if we can just close that poll now. I think most people have voted. Let's just have a quick look at that. So so we've got a decent spread across most areas, but most people, 62% of people are saying all of the above. So that's really interesting. And many of these are specifically referenced in the FATF report as part of their recommendations. And I know we have a number of regulators and senior business leaders on the call today. So interesting to hear this call to action from the private sector, looking for additional guidance and research. Okay, so I think that about draws time on our fascinating discussion. Apologies if I didn't get round to everybody's questions from the audience, but you can continue to discuss and ask questions to our panelists live on the Themis Senate, which is our Themis online Q&A portal. So if you want to ask more questions, you can continue the conversation anytime over the coming days and weeks. Just visit the community section on our website and find out www.crime.financial, and you can find out how to become a Themis member. We will send round a Themis briefing note, which summarizes the 200-odd page FATF report into 6 or 7 pages. So really a lot more bite size for corporates and individuals to help understand the issues kind of brought out in the FATF report on top of what we've discussed today. Please feel free to drop me a line if there's anything raised today that you'd like to discuss. You can contact me directly anytime. I'd also like to thank our esteemed panelists today, Graham Baldock, Dr. Graham Baldock, Chief Compliance Officer, Anglo Gulf Trade Bank, Hala Bou Alwan, CEO of Hala Bou Alwan Consultancy, Chris McLeese, Head of Sales for Dow Jones Risk and Compliance, Dubai, Dickon Johnstone, CEO of Themis, and of course our co-host today, the Capital Club. I hope it's been a valuable session for all of our guests, and that you've got some good takeaways and some actions that you can follow up on. Again, thank you very much for joining us today. Best wishes and take care. Goodbye.
Thank you. Bye.
Thank you. Bye-bye.
Bye. Thank you.